Welcome to a sponsored webinar by Practice Ignition, hosted by CPA Australia, the what, the why and the how of compliant engagement letters. My name is Melissa and I will be hosting this webinar and available for any troubleshooting questions you might have with your WebEx setup. We have people joining us from all over the country for today's webinar. I would like to take a moment to acknowledge the traditional owners from around Australia and pay my respects to elders past, present and emerging. I extend this acknowledgement to all Aboriginal and Torres Strait Islander people who may be joining us today. I would also like to acknowledge that today we are being joined by CPA Australia Board Director, Dale Pinto. Thanks for joining us, Dale. And I would now like to introduce you to today's chair, Ketty Waller, who will facilitate this session. Ketty, I'll open your mic.
Hi, Melissa.
Hi, Ketty, I can hear you, so over to you.
Great, thanks, Melissa, and welcome everyone to today's session. As Melissa said, my name is Ketty Waller. I'm the Head of Public Practice here at CPA Australia, and it's my pleasure today to introduce our presenters, Rebecca Mahalik, Ethan Cooney, and Greg Lewis. So I'm just going to take a few moments and introduce each of our speakers. Rebecca was a founding partner with Aptus Accounting and Advisory, a cloud-based accounting firm in Sydney, which focused on leveraging technology to support client growth and help solve their problems. Aptus Accounting Advisory won the Innovator of the Year at the 2018 Australian Accounting Awards for their focus on tech advisory and efficient business services. In 2019, Aptus joined the Business Depot team, which has expanded the firm's services offerings to their clients. Rebecca leads the Business Depot Sydney-based operations, as well as heading up the tech advisory offer for Business Depot nationally. Welcome, Rebecca. Ethan Cooney manages the strategic partnerships for Practice Ignition throughout the APEC region. He brings broad experience of helping accounting firms leveraging technology to run more efficiently, be more profitable, and deliver a premium client experience. Prior to Practice Ignition, Ethan was a partner, success specialist, and oversaw partnerships at Fathom. Welcome, Ethan. And finally, Greg. Greg Lewis is a tax advisor. He began his career as a graduate at KPMG, then moved to Ernst & Young, where he was promoted to the position of principal in the tax division. After returning to KPMG as a partner, Greg went on to become a consultant in the tax at law firm Minter Ellison. He has been a company director and a chairman of various organisations, both public and private. He was managing director of a specialist industrial fittings manufacturer, Bayside Vendors Proprietary Limited, supplying the civil, electrical and telecommunications industries. He is a consultant to private companies on a wide range of technical and strategic matters. Greg also holds a Bachelor of Economics and a Master's of Taxation. Greg was appointed to the Tax Practitioners Board in December 2015, reappointed in 2019, as acting chair of the board for the periods of 2016, 17 and 19. So today we'll be taking questions through the Q&A box, as Melissa earlier mentioned. Please direct your questions to all panellists during the session. We will look at doing questions at the end of the session, but please keep them coming through as the session goes on. And if there's any problems, please direct those to Melissa. And it's time to now commence our session. So Ethan, I'd like to hand over to you.
Excellent. Thanks so much for the warm introduction, Ketty, and thank you to the CPA Australia team for hosting us today. Warm welcome to all of you who have joined us from all over the country, whether it's the morning, it's just ticked over 12 o'clock here in Brisbane, so good afternoon for those of you who are over on the east. Really excited to be presenting this content to you today, and we're hoping that you'll come away with some really clear outcomes on a couple of different topics here, but primarily we're going to focus on the importance of engagement letters. And so I'm really privileged to be able to be joined by this panel today. This is not the first time that we've run this session, and so we've had so much success running this content that we've decided to run it again for all of you CPA Australia members today. And so really encourage you to make the most of the collective IP that's on this panel today. So if you would like, please ask questions throughout the session. We'd be more than happy to answer those, as Ketty mentioned, and we can make some time throughout and also at the end of the presentation as well. In terms of what I'd love you to come away with from this session, there are a couple of key learning outcomes, and shortly I'll pass to Rebecca, who's going to share, I guess, an overview of why engagement letters are something worth revisiting and considering in your accounting firm. But firstly, we're going to look at why engagement letters are so much more than just a compliance tool within your accounting firm, and how they can be used to actually enhance your client relationships and be used as a really strategic business tool. We're going to cover some practical elements of what to include, when and how to issue engagement letters. We're going to talk about how you can streamline your engagement letter and admin processes to save time, and then talk about some of the key technology components involved with helping you better manage your client relationships. In terms of the agenda, just a quick note that this will be recorded as well. So if you are interested in watching this back later, I'm sure that you'll be able to have access to this via the CPA Australia channels. What's going to be really interesting, and what I'd encourage you to stick around for if you can, is the common questions and misunderstandings, where we're going to hear from Greg, who has a wealth of experience on this topic, obviously working with the Tax Practitioners Board, and we're going to dive into a couple of the war stories as well. And so would love to hear from the experience of both Beck and on Greg on those points. I just wanted to preface that this content is actually part of our fixed fee and engagements playbook that Rebecca has contributed to, that is being hosted and run by Practice Ignition. And so this is going to be a centralized resource with information around, firstly, how you can move your business to a fixed fee billing model, if that's something you're interested in, but more importantly, on the engagements front, all of the content that you need to know about properly engaging your clients. And Beck has shared so much wisdom in what she's implemented in her business that's going to be captured within this playbook. And so just a note to let you know that we'll be sending out more information on this playbook, and to keep your eyes peeled for this when it's available in the near future. Before we get stuck into things, I'd love to launch a bit of a poll. So Melissa, hopefully you can launch this for me now. There are 3 answers to this question here, but I would love to know what your biggest pain point is when it comes to engagement letters or sending engagement letters to your clients. There's 3 answers there. They take up too much time. I don't know what to include in my engagement letter, or I don't know when or how often I should be engaging my clients. So if you guys could do me a big favor and vote on that poll there, that would be excellent. We'll leave that up for another 5 seconds. All right, hopefully you're able to answer on that poll there. If you haven't, it'd be great if you could now. And we're actually going to, I'm not sure if we can share the results there, Melissa. If we can, that would be great, but here we go. So the vast majority there don't know what to include in their engagement letter, closely followed by they don't know how often or when they should be engaging their clients, and then they take too much time. And so that's certainly consistent with what we see from our customers at Practice Ignition. They don't know actually what to include in the engagement letter, how long or short it could be. We've seen engagement letters that have gone from 3 pages up to all the way up to 200 pages as well. So hopefully we're going to be answering some of those questions for you today. The second question that we'd like to ask is, what tool do you actually use for sending out your engagement letters? And this is so we can get an idea of what technology you're currently using in your business. Do you use Practice Ignition currently? Do you use Microsoft Word? Do you create your engagement letter in a PDF and send that to your clients? Perhaps are you using an e-signing tool, or do you use other software? So again, if you could do me a big favor and vote on that poll, that would be fantastic. We'll give you 10 seconds to go. Excellent. Thank you. Thank you. All right. We can end that poll, and I might take a look at the results as well. And the vast majority, as I expected, are using Microsoft Word and PDF, which is great. So hopefully we're going to be able to share with you some ways as to how you can streamline that process in your business moving forward. What I'd love to do now is hand over to Beck. So Beck, if you could flick your camera and microphone on. I've heard Beck present this session a couple of times, and it's absolutely fantastic. So if you have a pen and paper, or we all take notes on our iPhone or iPad now anyway. So if you can grab some note-taking device, make sure you take as much or glean as much as you can from this particular session, as Beck provides a bit of an overview of client engagements, what to include, how often you should be sending them, and how Beck has used engagement letters within her business. So Beck, I'll hand it over to you.
Thank you so much, Ethan. I'm just making sure that everyone can hear me now. If you can't, just want to mention it in the chat or in the...
Oh, I think you've just... There we go. You're back.
You can hear me? Great.
Seems to be dropping out a little bit there, Beck. So,
can you hear me now?
yep, that's great.
Yep. Okay, awesome.
Rebecca, it's just Melissa here. I might ask you to turn your camera off. I think your internet connection might not be great, so we'll just stick to the audio.
While Beck is getting her camera sorted out there, for some reason we can't hear you coming through, Beck. I'm not sure if you want to just flick that off and try again. I can see you flicked it off now. Can we hear you now?
Is that working now?
It is.
Okay, fantastic. Sorry about that.
The joys of online meetings.
Yes, and working from home. Okay, so I'm going to, as Ethan mentioned, talk through a few of the things that I've got working for me in my practice at the moment around engagement letters and some of the rules and responsibilities that we have as accountants and bookkeepers on in regards to what needs to be included in your engagements and who actually governs and takes care of those for us. We'll have a look at how often we should be providing our engagement letters, who is ultimately responsible for what and for when, and when the services should be charged, including payment terms to your clients, and what isn't included. So what you should be doing when we're looking at engagement letters generally is understanding in your engagement letter what services you're providing for your clients. And that's all of the services that you're providing, not just the annual compliance, but any work that you do for them during the year. If you have to give them any advice or services that are outside of the standard tax return or annual accounts, everything that you know that you do for your clients should be included in your engagement letter. And if we have a look at some of the guidance around engagement letters from both the Tax Agent Board and from our APSB, both of those say that we should be providing our engagement letters at least on an annual basis to our clients. And what's really fantastic about giving your engagement letters every year is it gives you the opportunity to review your services again and make sure that you are fully engaged and fully covered for everything that you're supplying to your clients and for all the work that you're doing. Your engagement letter should also include content around who is ultimately responsible for everything on both sides. So not just what you're responsible for providing your client, but all of the things that they are responsible for providing to you. So we all know that we can't do our jobs well if our clients don't give us information in a timely manner. So the rules and responsibilities for both parties should be included in your engagement. So it's very clear on what needs to occur for both sides. It keeps us out of a lot of mess, and it keeps the expectations of our clients much clearer, and it builds a foundation for a really strong relationship for our clients. We should be including as well definitely how often we're going to charge our clients, what the basis of those fees are going to be, and what our payment terms are. If you are still using time billing and you would like to invoice your clients on completion of work based on time, then that information should be included in your engagement. If you're doing upfront fixed fee billing, or if you're doing monthly recurring billing where you will invoice your clients every month based on the work that you know you'll be doing, all of this information should be included in your engagement letter. What should also be included is all the things that you're not going to do. As we know, sometimes there can be a misunderstanding between the work that we think we're providing and the work that our clients think that we're providing. And that can also include things such as whether or not we're going to be doing doing an audit of accounts. It should be clear when you're not doing an audit so that there's no misunderstanding that your clients think that you're doing, providing a level of assurance that's above and beyond what we actually are. Unless, of course, you are doing an audit, then your engagement should be drafted that way. If you're providing additional services such as bookkeeping and payroll services in your engagement letters, you should be stipulating who's responsible for the HR part of that. and for determining what awards are applicable. I know many bookkeepers and many accountants who will provide payroll services and single touch payroll services, and most recently, JobKeeper assistance. But what they're not doing is determining whether or not payment rates are correct, and that needs to be included in an engagement letter. So there's a clear definition of who's responsible for what items. Ethan, thank you. So some of the things that will go into your engagement letter and will determine what text needs to go in will depend on your registrations as an accountant, as a bookkeeper, as a tax agent, and potentially even as a financial planner, as an auditor, whatever it is that you are required to comply with. However, all of us are required to comply with APES 305 terms of engagement. That is actually quite a lengthy standard to go through, but it gives us very good guidance on the things that we need to include in our engagement letters and how often we're supposed to be engaging with our clients. Of really great guidance more recently and in very plain English is the Tax Agents, the Tax Practitioners Board TPB PN 3 2019, which is a practice note that the Tax Practitioners Board released last year. It gives incredibly clear English guidance on what should be included in your engagement letter and how often you should be engaging your clients. It even goes down quite specifically on who you should be engaging and makes a clear distinction between different entities and different individuals. I know that I didn't fully appreciate until this engagement, this practice note came out, that I should always be engaging all of my clients separately, to the extent that a husband and wife should be engaged separately, or partners in a partnership, shareholders should be engaged separately to the company. Greg, if you're available, could I get you to pop on your mic for a second? I'd like to actually talk a little bit about the practitioner note, if you've got a moment, and if you could share with us some of the driving force behind why the Tax Agent Board decided to actually release this practice note.
Thanks, Beck. Ethan, I'm assuming my mic is working well. If you want to give me a thumbs up, thank you. Just before I start, can I just welcome everybody and hope that everybody's families and their fellow colleagues are all safe. Very challenging times. Look, this is a practice note. I'm pleased we've had positive feedback. This is the second session I've done with yourself, Beck, on this, and we've had really good feedback. For many years since I've been on the board, this has been one of the perennial questions. Can you give us some guidance? Why don't you have a draft of a standard engagement letter? So it's arisen through a lot of feedback and stakeholder engagement and the requests for, can you give us something in plain English, not techo speak, that we can take into our practices? So it's really through practitioner engagement and the feedback from stakeholders that has led to this. It has also probably been as a result of a number of cases that we have seen that have come before the board, where we feel that providing guidance may hopefully put practitioners in a better space so that they may not unintentionally breach the code of conduct. Back to you, Ben.
Thanks so much, Greg. Yeah, the code of conduct and that practitioner note, the way that the two of them work together is actually quite great. And I do like that there's some of the text that's around the practitioner note on the TPB website talks about the interaction between the two and how by following the guidance from the board, you'll be able to absolutely meet many of your obligations from that we have under that code of conduct. If we move on a little bit from the generic or the more encompassing standard, there are some other standards that we do have to comply to, which if I mentioned before around audits, if you are doing an audit, you need to be across your ASA 210 agreeing the terms of audit engagements. If you're providing valuation services, please make sure that you're referring to APES 225 and taxation services, which I think a lot of us will be actually providing. We also need to be reviewing APES 220 to make sure that we're complying with these standards. So I do know, even myself in practice over the last 20 years, have often thought, I don't know what to include. The reality is there is actually a lot of guidance around what needs to be included in an engagement letter. And now we're getting more and more clear English guidance from the boards and the bodies around us to help us get through this. Now, I did mention a minute ago that the Tax Practitioner Board does actually mention in their practice note that they'd like separate engagement letters to be issued for each client in receipt of services unless it's agreed otherwise. Now, there is currently no clear guidance on what constitutes an appropriate agreement to engage entities together and who would need to sign this. And Greg, you might have something to say on this, but my understanding is the reason why there is no clear guidance on this is because it's actually not the recommended course to engage people together, and it's much more appropriate to engage each individual separately and each individual separately.
Couldn't have said it much better. Beck, look, the reality in terms of the board's position is it's driven a lot by the Tax Agent Services Act. And when we look at the definition of what a service that either a BAS, TFA or a registered tax agent provides, so we look at it as a relationship between the practitioner and the individual client. And I'll give an example. And I like to use this example. I think I used it last time. If you and I are a married couple, Beck, and Ethan is the agent, then we find on a number of times that you'll have one spouse that may be the person dealing with, let's say it's me, it's dealing on a majority basis with Ethan, and it all works well when things are working along well. But when you get into issues around some disagreements with spouses and a breakup, this is when we see the need for individual engagement letters. So there's a number of reasons, not just driven by the Tax Agent Services Act, where we see that as being really important. And the last one I'd like to mention is the need for client confidentiality. And the Code of Conduct for all of us as registered practitioners talks about you cannot disclose information to a third party. So that third party, so if Ethan is practicing in his own right as an individual, and if he's got a separate practice entity, he can't separately disclose that information to his practice entity until he gets our agreement. So just like to highlight that. So it's really important that there's that other reason it protects the client confidentiality too. Back to you, Beck.
Thanks so much, Greg. Ketty, if you're available as well, I'd love to understand a little bit more if the CPA has any guidance or preference around how accountants are engaging their clients and whether or not separate engagement letters are the way to go as well from the CPA standpoint.
So as a general rule, our guidance would follow that of the regulators. So if the TBB, for example, or another regulatory body would be issuing and recommending separate engagement letters, we would be following that as best practice for our members.
Thank you so much, Ketty. One of the other things I'd probably also raise here is that not just the complying with the Tax Practitioners Board and also any privacy concerns, I think it's also really risky to engage multiple entities in one engagement letter if you're providing a range of different services, because the reality is not every individual and not every entity involved in an engagement is going to require all the same services. Then it becomes very unclear exactly which entity you're providing what services for, and then being able to prove that you've actually met your obligations on the end of that engagement becomes far more complicated if we muddy the water. So I think that given that and everything else we've heard, absolutely separate engagements is the way to go.
Beck, if I could just make one comment, absolutely reiterate that comment. I deal with a lot of dispute work, and a lot of it boils down to the first question I ask is, where's the engagement letter? And if a piece of work has been undertaken and it's generally a fee dispute or a dispute over a potentially incorrect advice, this is the principal document that people start with. So I think highlights what you've just said there, being clear with your client, each client, what you've agreed to do for the fee, because it's a great starting point if you do end up in a dispute. Back to you, Beck.
Thanks, Greg. Now we're going to talk a little bit more about how often our engagements are actually needed. So engagements can be either reoccurring or ongoing, and there is mention of that with both the TPB and APSB, but you need to understand that with an engagement, they should be reset on an annual basis. I know the Tax Practitioner Board recommends this as well. The reason why you should be doing it is it gives you the opportunity to actually review those services that you're providing the clients. We know in practice that the services that we're providing is constantly changing. In the last 6 months alone, we've had to add new services, reviewing clients' eligibility for JobKeeper, reviewing clients' eligibility or calculations for cash flow boost. Potentially because of all the changes that have occurred recently, we've had to jump back in and prepare BASs where maybe we hadn't been doing it before, but the clients want to make sure more than ever that the information they're providing to the ATO is accurate. I know personally I've done some work around some individual state government grants, and there are all of these things that I definitely was not providing these services last year. As a result, all of my clients are being re-engaged consistently. Any time that I have to provide them new engagement, or if there's something that's outside of scope, they get either an updated engagement letter or a new engagement letter. And if there is no change, we absolutely review our engagements annually. The process that we go about them is actually to review them just before the end of the financial year usually. I find the best time to review client accounts is when we are doing interim reviews or we're doing tax planning, because it gives you that opportunity to look at what's been going on with your client over the last 9 to 12 months and what's going to change when we have to do their compliance work, or if there's any opportunity for additional advisory work. And that's why we do at a minimum our annual engagements in that April to June period every year. Now, I know that when I start, sorry, go Ethan.
I was just going to ask you a quick question to dig into that a little bit deeper, Beck, and it's something we've talked about a lot in the past, and it comes up as a common question. How do I start that conversation with my clients around potentially offering additional services outside the current scope that they have? I'd love to just press into that a little bit more and understand how that conversation might run, with yourself and your clients. How do you undergo a review of their services? How do you approach that conversation? Because quite often what we see is firms that are either obviously underservicing, but quite often over-servicing their clients, providing far too much service for what they're actually getting paid. And so have you put in some structure or rigor around what that looks like in your business with your clients?
Absolutely. There's a few things that we do around there, and I might actually start with the over-servicing clients. So what's been really fantastic, and you'll touch on this a little bit more, is the implementation of Practice Ignition for us as our engagement tool. Because what it does is allow us to really closely monitor our scope in a very accessible way by making those engagements easy to get your hands on. So to make sure that we're not, and I suppose over-servicing is potentially the wrong word as well. We want to over-service our clients. We just also want to make sure that we're getting paid for all the servicing, we're actually properly engaged. So we've got some very tough rules around the firm around making sure that all the work we do is in scope. And what we've got as a practice is anytime a client contacts us to ask us to do work, we immediately check the engagement. And if that work is not in scope, we send a new engagement quickly. And we've learned, I think in reality and in practice, your accountants want to know that the work that they are doing is valued not just by you as the principal or the practitioner, but also by the client. They don't enjoy going through that process of knowing that work that they're doing isn't ever going to get invoiced, or if it is invoiced, isn't going to get paid. So once they go through that enough times, or you've clearly explained to them the ramifications of that occurring, they don't want it to. So jumping on and making that easy for them to access engagements and sending out a new one, it's not that much of an actual mind jump for them. They want to do it. I haven't had really any pushback from my team in implementing those processes. And what it means is that we're getting paid for all the work that we do. The year that we implemented those rules around Practice Ignition and checking scope and sending out engagements to our clients, the revenue in our firm increased. I think it was about 27%, not by any additional clients, just by making sure that we're actually engaged and getting paid for all the work that we were doing. And that was a huge change, and very important when you move to fixed fee, because there is a greater risk when you move to fixed fee and away from time billing, of doing some work that's outside of scope, because you might not focus on timesheets quite as much, which was one of the things that we had done.
That was exactly what I was leading into, Beck. We see a large number of firms that are wanting to transition to a fixed fee model with at least a portion of their clients, but fear that they're not able to completely, scope out the work or get the price right at the start. And so that review process to make sure that the scope is aligned with the price is so important. And the engagement letter can realistically, it can actually train the client that whenever there is a change in the scope, they're expecting to see a new engagement letter, and it gets them to commit to something and again digitally sign something, so there's buy-in on both sides. So often we hear, and I don't know if you've got any stories here, but so often we hear about these accounting firms doing all this additional work, and then when it comes to charging the client, they said, oh, if I knew it was going to cost that much, I wouldn't have asked you to do it anyway.
Oh, absolutely. I think that has happened to everybody at some point in their careers, probably multiple times, because, as tax agents and as accountants, we do want to help our clients. There is that natural driver there for us to make sure that we give them the best service possible. And we get so worked up in doing that, sometimes we forget to stop and pause and think about, well, who's actually going to pay for this work? And do they really need it in the way that I'm going to do it? So having that minute to pull back, look at the engagement, give a bit of a quote and send it off allows both sides to determine whether or not they actually want that to occur. And I found that to be a fantastic change. In some instances, when we start to move away from the compliance work and start to think about some additional advisory services, the clients don't always know if this is something that they want, and you as the accountant may not know how much to actually charge for that work. What we have done in the past is actually have a period of time where we might offer that service for free, just to understand a little bit about how long things will take us, what we want to charge for it, and let the clients see what that additional service looks like for them to determine whether or not they want to take it up. And I'd say 9 times out of 10, when we've done a good job of explaining the value from that touch point and understanding how those additional services work in their businesses, that they do take them up once we get around to being able to put a price on them.
Ethan, could I just add to that, if that's okay? I think on the flip side, being a regulator of the profession, some of the cases that I see sitting on a board of conduct committee, and also some of the intel that we get from time to time, is that on an engagement letter I see as being very important on an annual basis. One of our items in the code of conduct requires all of us to understand the state of affairs of our client. And, unfortunately, there are cases where you don't have an engagement letter and you've known the client for 10 years, it's a set and forget. And unfortunately, some things do go through to the keeper. And I use the example of the work-related expense work that's been going on. So I think it's a great opportunity for people just to engage with clients to ensure that they understand, has there been a change in their circumstances? One, to ensure they're meeting their obligations under the code. So that's me being Mr. Regulator. But then me being a practitioner, I see it as a great way of managing your risk and going to Beck's point that you can upsell into services if I've sold a rental property this year or something's changed. But if you don't have that level of discussion, sometimes those things just don't occur. And I have seen that from time to time, and in some cases come before me.
And Greg, just to add to that from CPA's perspective, we come through in PI claims, drafted terms of engagement, and going to some of the points that you mentioned earlier, Rebecca, not scoping in who's responsible for both the practitioner but also the client, and then having a clearly defined service agreement as part of that in terms of what we'll be offering and not offering. So I think it's a really great point that both you and Greg have made.
Excellent. Thanks, guys. Well, we might move on to the next section now, but I hope that was helpful for all of you. And again, I'd encourage you to go and watch this back if you've missed anything. But in that last section, we covered what should engagement letters include, what are your actual obligations in terms of who governs engagement letters within Australia, how often you should engage, and who you should be engaging as well. And we've just heard briefly about some of the business benefits of implementing a review process where you're matching your scope to your price each year with your clients and making sure you're continually having that conversation. What we thought might be good as part of this webinar is to put together a couple of common questions that we get at Practice Ignition, and also highlight some common misunderstandings that are out there as well. And so, you know, we like to use the phrase internally as objection handling, but there are certain phrases and comments that we hear quite often, and now a fantastic opportunity to be able to get not only Beck's thoughts on these particular quotes as a practitioner, but also with Ketty and Greg coming from the regulatory and membership body perspective as well. So we're going to go through a couple of these questions now, and just wanted to highlight again, I've seen there's a couple of questions that have come through, but please feel free to use that Q&A box, and we can definitely answer those questions as we go as well, and I'll be reviewing that throughout this next section. So kicking it off, and I'll hand over to Beck shortly, quite often we hear that engagement letters are just a recommendation. Why should I bother? So I think it's been pretty clear from what we've covered already. But Beck, I'll hand to you to share your thoughts or what you've heard in the industry on this point.
Thanks for that, Ethan. And yeah, I do think that we've probably covered this quite well so far, but I do want to circle back around to it. Absolutely, it's a recommendation from in a TPB practice note that we have an engagement letter. There isn't anything hard and fast in there that tells us that we have to. We do have to have engagements with our clients under APESB though. And what's really important is to understand, which we've mentioned a couple of times, is if you don't have an engagement letter and there is a dispute, then it is really difficult, not just for yourself to defend the work that's happened, but for, say, the Tax Practitioners Board or the CPA or whoever the bodies are around you who are supposed to support you, to be able to support you if you don't have that engagement letter available. Not to say they won't, it's just a lot harder to have these other people kind of have you back in that situation. Greg and Ketty, have you got anything that you'd like to add in relation to engagement letters and that dispute resolution process?
Yeah, I'll just quickly provide a quick example as a support to that one, Rebecca. We had an example where there was a PI claim that come through. There was a terms of engagement that was in place with the client, but it was poorly drafted, and it did actually have some different services that they were providing, including being a mailbox for that particular client. The challenge was that the terms of agreement and the services weren't actually then communicated to the staff within the practice. And so even though there was a relationship between the practitioner and the client, the rest of the staff weren't actually clear on what was expected under that terms of engagement, and it actually led down to a breakdown in services that were actually committed to. So I think a key takeout would be ensuring not only you understand the services that you will and will not provide to your client, but ensuring any of your support staff and relevant people within the practice also understand their roles and responsibilities for that client as well.
Just two comments. One, as a practitioner over many years, I cannot underestimate the importance to anybody on this call today of having an engagement letter. And I think one of the misnomers, and I just want to put that out here, Ethan, for the listeners, is in practice where I was a partner of a very large firm, we did have quite lengthy engagement letters for particular reasons, but you can, using the right tools and the right methods, get something that fits your business, and it doesn't need to be a storybook. So I know that's one of the misnomers out there. From a dispute resolution perspective in both my own private dealings, but also then going to the regulatory side, many, many times do I see there's never an engagement letter in place. So you're starting off with who said, what said, and it's very difficult to get some type of sensible common understanding to resolve an issue. As a regulator, and it's interesting, there's a really bold statement, and I think Beck pushed me last time we did this, is why doesn't the board mandate engagement letters? So my answer is I'd love to mandate engagement letters today, but we don't have, it's not within the statute in that regard. So we just strongly recommend that you have them, and this is why we are doing these types of education sessions. Back to you, Beck.
Thank you for that, Greg and Ketty. I think we're all in agreement around this. So if we move on to the next point, and this is around engagement letters making it awkward with the clients. Now, I'm going to be really honest around all of this. The only time that engagement letters will make things more awkward with your clients is if you've been working with them for many years without an engagement letter and all of a sudden have to pop one in front of their face and say, oh, now I'd like you to sign this or review this. And absolutely, that can be an awkward situation because you probably should have already been doing that for a long time. So the best way that I would find or suggest for you to deal with that at the moment is to actually just rely back on the regulations that we have, and this is the best time ever to actually be having a look at putting engagements together for your clients if you haven't been doing it, or if you haven't been doing it annually, because we have recent guidance and we have some recent changes to things, and you can use that not so much as an excuse, but it's, you know, it's much easier to say to your clients, we've had some recent guidance from the tax agent board saying that we need to engage our clients every year. So here we go. It's a much easier way to encourage them to help you do what you should be doing. And let's not forget, you know, we've all encountered some sort of a fee dispute or an upset client, and all of these things have occurred because could have been dealt with better if we had engagement letters in place that clearly dealt with that situation. So although not engaging on clients for a while and trying to do it now might be an awkward conversation, it's still a much better conversation, a much better process to go through now than in 12 months when they don't want to pay for some work that you've done. That's going to be a much more awkward and potentially disruptive situation to go through. I'm not sure if Greg or Ketty have anything they'd like to add to that.
I'll let Ketty start. Ketty, if you'd like. I've got some comments, but I'll let Ketty start if you'd like to.
Greg, I'll just make a quick observation, and something that you said earlier, Rebecca, is that quite often we come to a lot of these things from a compliance perspective, or you know, it's a requirement under APSB, or you know, it's best practices recommended by the TPB. I think one of the things we're really trying to look at CPA is how is this actually a best practice requirement for you, and the value that it actually has with your client. And Rebecca, you spoke before about the value of advice, and I think that's something that we traditionally underestimate and undervalue in professional accounting. You know, our members and you are the trusted advisor. You know, the individuals and the small business community engage with you because they value your expertise and your professionalism and your guidance. And I think the value of these engagement tools is that it actually gives you that opportunity to not only cement that relationship, but actually show the value and the service and the commitment that you're actually having year on year. And, you know, things like annual reviews of the engagement letter, or even more regularly when things change, just help reinforce and actually cement that relationship. So I think my tip would be, yes, these are definitely things that are in place to protect. Places, things around compliance requirements, but ultimately, if we look at these as a best practice engagement tool, it will actually build a better relationship with your clients.
I wanted to just approach this, if I could, from both the regulator, but then also public practice. If I look at it, and these comments are going to hopefully be the same, I think I look at engagement letters, they need to be turned around because clients look at it and go, here's another letter, I've got to review it to sign it. We need to, and I've found for many years, explain to clients what obligations do they have in this process. A lot of the time it's, oh, Beck, for $10,000, you're going to do this, this and this. And you're sitting there going, well, you gave my team the last minute at Sunday night at 5 p.m. Lodgement is due at close of business on the Monday, and I've got 45 other clients all doing the same thing, and you're wondering why we have a discussion that is out of scope. And I think all of us on the call today will have that. So I think one of the things I'd really like to see practitioners look at is talk to your clients about your expectations of them. If you're looking for a set fee and these things, you need to give me information in a timely manner that's reasonable. You also need to inform me if my circumstances have changed, because there are some obligations here. And I think sometimes what happens is those obligations are not set out in an engagement letter. And I look at that third point, where an accountant's been impacted due to the client not providing info, or they're not telling them all the material circumstances. So I think that's something where you can explain back to the client, please be upfront with us. It helps us plan and it avoids the dispute. I think sometimes that gets overlooked. We only look about what's the practitioner providing in the engagement letter, but there are also obligations too. I just wanted to mention that as being very important.
And Greg, I might just pick up on that third point that you've just noted there. I'm sure most people are aware that there is some legislation being at the moment around JobKeeper and around this new concept of a legacy employer, and the potential around being a 10% decline in GC turnover. And we've been looking at this internally and doing a lot of work on it. One of the things that it's going to rely on is actually having accurate information from your client and really understanding that. So I think, as part of these ongoing changes and COVID stimulus measures that are coming through, that discussion and that engagement with your client is key. It's really important for them to understand the types of information and why you need that information. And you're going to need that in terms of being able to fulfill your obligations in your different roles as tax agents and BAS agents, for example, to actually support them through these ongoing measures. So I think, having that open dialogue and building that understanding is going to be key and really help, again, build that client relationship, but also ensure that you're going to be meeting your obligations as part of that.
Excellent. All right, we might move on to the next point now, just in the interest of time. Beck, probably worth getting your input initially on this point, and would love to hear, whether you've had pushback from your clients on this point particularly, but including fees in your engagement letter. Another point of contention or common question that we get at Practice Ignition, but we've already heard the benefits of mitigating the risk of a fee dispute from the regulatory side, but have you seen pushback or resistance to having your fees outlined in the engagement letter with your clients?
Absolutely, that does occur, and I think it's occurred multiple times over my career, and often when it happens is when there is a disparity between what I value work at as and what the client values work as. And this will happen whether or not you are doing upfront fixed fee with your clients or whether or not you're doing time billing. Regardless, the clients have an idea of what they want to pay for work, and if what you want to charge for that work is not aligned, then there's going to be an issue between you and your clients. And what I find is it's just better to deal with that up front, because nobody wants to put a lot of effort into a job with a client to know that they don't value it in the same way and are going to dispute that fee. If they don't want to pay what you want to charge for it, just deal with it at the beginning of the relationship before you've wasted time and effort on both sides, because you absolutely are better placed putting that time and effort in a client that values your services as opposed to somebody who doesn't.
And one thing to add there as well, part of what we see at Practice Ignition, obviously giving clients a way to sign payment authorities up front alongside the engagement letter, is that the side benefit of this is that if there's resistance from your client to sign a payment authority or to pay you via a direct debit, you might want to question whether they're going to be a good client in the long run as well, or whether you want them to be, want to bring them or onboard them as a client. If there's resistance before you've even started the work, on that front, then it's probably worth something considering as well.
Yeah, absolutely, Ethan. If a client doesn't want to give you their payment details up front, then I would be questioning whether or not they'd planned to pay you all along.
Ethan, could I just make one quick observation? I think this point becomes very important when practitioners agree to have fees deducted out of refunds. I see this on many occasions, both at the board as a regulator, but also in private practice, where there's just an agreement that you'll just deduct whatever it is off the refund, and when it comes time to deduct it and the client realises they've only got $200 out of a $4,000 refund, you end up with some fairly hefty challenges. So I just wanted to highlight that there. I think people should be upfront with the value issue. I'm absolutely lockstep with Beck here. It is what it is. And if the client doesn't like it, you say to them, well, if you go and buy an insurance policy or something else, you ask for what it costs. So it's, to me, I absolutely, you just lead yourself down the garden path of troubles without being.
Absolutely, and I think the concern comes around how to communicate the fees as well. And we heard from Beck earlier that the way that she does it is closely ties the value to the price. And so, accountants traditionally are not, if you're looking at the DISC profile, they're not going to be folks who are incredibly outgoing and traditionally consider themselves as salespeople. But tying the value of the work that you're doing, or when you're doing your interim reviews and so on, to the review of the price can go a long way to help sort of smooth that over. So I appreciate that observation there, Greg, as well. We have already covered this, but it might be worth just revisiting again, because it is so common that we hear that, we've been working with this client for 5, 10, 15 years. We did an engagement letter back in the day. Why do we need to do it again? Beck, do you want to just share how you've broached that with some of your older clients potentially, or maybe give us some quick tips as to how to address that with some long-standing clients?
I've actually had the advantage of having two occurrences, which has made this quite easy when I transitioned from my old firm into the current firm that we are in now. Any of the clients that travelled with me and hadn't been used to having engagement letters with the previous firm, I was able to just let them know that under my standards, new firm, new business, we need to now engage you, and that actually smoothed over quite easily. And now we're having a little bit of pushback because I am more aggressively than ever making sure that all of my clients individually are engaged individually, and I am now just relying back on that TPB practitioner's note. At times, if we do, have some clients who complain about it, because they're used to being able to sign off an engagement for their spouse or under some sort of circumstance like that, we just explain to them we can't do that anymore. We weren't really particularly happy with it in the first place, but absolutely here is the guidance from the TPB, and this is what we're going to be following from now on. Once you explain to them that it's a regulatory thing, they're pretty okay to jump on board and continue to deal with you under that manner.
Excellent. And for the sake of time, we might move on to the next one here as well. It would be great, Greg or Ketty, to get your insights on this as well. Often we see folk engaging at a group level rather than at an individual client level. And we heard earlier that it's so important to engage a husband and wife separately. From your example there, Greg, also a company and its directors. What does the process look like, I guess, then if there is a dispute, what does that look like, from a regulatory perspective? Or is there a process then where that would go through a review? Or at what point does that become an issue where clients haven't been engaged properly? Feel free, anyone, to chime in there.
So,
sorry, Ketty, please go.
No, please go first, Greg.
I'll just make a couple of comments. I think, as I said to you earlier, the board doesn't have the statutory authority to mandate engagement letters. But as I've said, we strongly recommend it. We're doing it because today, to be honest, this is commercial. It's commercial common sense. You should do this. And I've learned that through many years in public practice. And I strongly have an advocate every time I go out and talk. If I look at it at a group level, one of the challenges we have, and I'm talking as a regulator, generally when we have cases come across my desk, it's for an alleged breach or potential breach of the Code of Conduct or the TASA. So the first thing we generally go to and our investigators go to is we go and look at the facts. And one of the things we do look for is, well, what did you agree to do? And so once you don't have that document, it just makes that job a lot harder. And again, we don't deal with fee disputes. It's not within our regulatory remit. But when we are looking at the provision of services and we are looking at other things where they needed to have been provided to a competent standard, one of the things I do as an independent practitioner on the board is I'll look at that and say, well, did they ask some of the questions that should have been asked? Or have you just set and forget the client for 15 years? So these are the things that we go through when we're looking at these particular matters. The other thing I also make the comment is, and I did it many, many years ago when I was a graduate, and I used to, you dump the billing on the graduate, and you have the group engagement letter, you'd spend hours and hours trying to work out, so how do I allocate, do I allocate $500 to the trust and is it $10,000 to the company? So I'm just looking at this from a practice perspective. I can see Ethan smiling. It's very unwieldy in that regard, but fundamentally, you know exactly what you're providing to each entity, and each entity is not going to require the same level of services. It's that simple.
And Greg, in the interest of time, I'll just echo your comments and also add that, we're in a very rapidly changing environment. And I'll be very surprised if any of your clients' circumstances are not changing weekly, monthly. So it is important to go back and have those part of that service offer and what you're actually looking to engage them for.
Excellent. Thanks, guys. And a great question has actually come through from Rodney, which I'll touch on in a second. So I appreciate you submitting that, Rodney. And thanks, Greg and Ketty, for your thoughts on that last point. One thing that I wanted to come to just briefly as we close this session out, conscious of time, so I can let you guys go and grab a sandwich for lunch or a coffee, which I'm desperately in need of, is some of the particular pain points we've addressed today and how Practice Ignition can address some of those points. And then to touch on your point, Rodney, how we can actually work with, or how we are working with CPA Australia to make this easier for practitioners. And so Essentially, a bit of background on Practice Ignition and why we've chosen to host this particular content stream today is that the platform that we have is specifically designed for accountants to be able to easily meet their obligations when it comes to engagement letters. And so we do that by actually automatically formatting the engagement letter and the proposal based on the service terms. And so you've touched on a great point there, Rodney, that engagement letters are long-winded, and if you need to read it all to ensure something is not hidden, it's a huge admin burden that comes along with that. And so, Greg, to your point, when you're allocating your funds out to the trust, to the company or whatever, it does become an administrative nightmare. And so for a smaller firm, I can absolutely understand why the benefits here have not outweighed the time costs involved with staying compliant with your engagement letters. And so our tool is specifically designed to automate the engagement letter functionality and also automate the collection and signature of payment authorities as well. What we then do, and for those of you who are using Xero or cloud accounting systems like QuickBooks Online or Xero, we actually automate the invoices off the back of that as well as the workflow. And so I'll touch on that in a second. Essentially what we're doing is actually automating and turning your proposal into a sales tool. And so to Beck's point earlier, when we're tying the value to the price, we're actually allowing you to present the scope of the work directly alongside the price of the services and have your clients sign off on the engagement authorities right then and there, which is so important. Rather than them having to actually print out, manually read through the PDF, they can e-sign it on their phone, their tablet, or their computer. But the most important thing here is very much that you're able to accept the payments up front on your proposals. So whether that's credit card payments or direct debit payments, if you're wanting to get your clients under these arrangements, these payment arrangements with you, why not get it all done and get your three ducks down with one stone? You're getting your payment authority signed, you're getting your proposal agreed to, and your engagement letter read and signed in the one workflow. What it then provides you with is a single system of record for all your client relationships. And Beck touched on this earlier in terms of her annual review process. Rather than having to dig through your Outlook and find copies of your Word-based engagement letters, which I know the majority of you are using from our survey earlier, you've actually got this digitized and a filing system now in place for all of your engagement letters, which not only covers your engagements, but also all of the scope of the services within those engagement letters, which means I can now filter by service and I can filter by client group as well. Not by client group, but by client cohort or segment, i.e. show me all my ITR clients so I'm not engaging them for any sort of additional wealth services or for their company accounting. So it allows you to really slice and dice your client base and be able to get some really interesting insights into what services you're actually offering each segment of your clients. What's really exciting now is that we're actually, and Ketty and I have had a number of conversations about this, and what Rodney has put in the chat here is very relevant. You know, has CPA Australia provided a way for practitioners to easily engage their clients? And there is a template out there, a Word-based template that has been available for some time now. And Ketty, I might ask you to share on this in a few seconds. But what we've been working on is a partnership between Practice Ignition and CPA Australia, whereby we can integrate the CPA Australia engagement letter template with the Practice Ignition platform. And what that means is when you're building a proposal for a client, you can select the CPA Australia engagement letter from the drop-down, and that automatically pre-fills and populates all of the client information, the scope of the works, the fees, all of those points which we've heard today are so important to include in your engagements, is automatically pre-filled in the engagement letter. And so it basically gets you to a point where you're 70 to 80% of the way there. You then need to basically review and read through your engagement letter before it gets sent, and then it is electronically delivered to your client. After the client signs, it's digitally stored and saved against that client record so that you can easily pull that engagement letter up. As you heard from Beck earlier, when her staff are going through the process of perhaps a client calls and requests a new service, the first port of call is searching the client in Practice Ignition, finding the engagement letter, reviewing it, sending out an amendment, and so the client digitally re-signs and agrees to the new scope of work. Ketty, I don't know if you want to quickly share on what this will mean or the brief benefit for CPA Australia members while you're on the call.
Yeah, absolutely. And I'll be very quick because I'm conscious of time, but we're really excited about this partnership and being able to offer this to members. And we're working very hard in the back end to get this out as quickly as we can. And to your point, Ethan, it's really add value to members and have a way to electronically engage efficiently with their members, with their clients, and really ensure that you not only have a compliant terms of agreement, but you actually have an engagement letter that is tailored and going to add that value and be very clear in the services and the value you're providing your clients. So we'll keep members updated and communicate that as it comes to hand, but we are working very hard to make that available soon.
Excellent, excellent. I'm sure you'll see some communication coming out about that shortly. Now, I just really appreciate all of your time today. I wanted to take just 1 minute to say a huge thank you to Ketty, Greg, and Rebecca for sharing your valuable insights and experience on our call today. I hope you guys found this session useful. We got, as I said, fantastic feedback from the last time that we ran this content, and so we're really excited to bring it to you today. To echo Greg's point at the start of this webinar, thoughts with all of you who are in Victoria as well. We know it's a tough time for not only yourselves, but likely your clients as well. And so really appreciate you taking some time out of your day to join us on this webinar. And a huge thanks to Ketty, Melissa, and Bianca for hosting us as part of the CPA Australia webinar series. So thanks again to all of you who have taken the time to join us.
And Ethan, I just wanted to echo your comments and say thank you again to your time today, Rebecca, and to Greg's. It's really invaluable, especially for practitioners, to hear from not only experts, but also the regulator in there. And so, Greg, we really appreciate your insights today. And with that, I'm going to hand back to you, Melissa.
Thanks, Ketty. And again, thanks to our presenters, and thank you to everyone for your participation today. In the next 3 working days, you'll receive an evaluation survey accompanied by a recording of this webinar. We really appreciate your feedback, as it is extremely valuable to help us deliver better events for you. Thanks again, and we look forward to welcoming you to another CPA Australia webinar soon.
Thanks, everyone.
Thanks, everyone. Bye now.